Huh? We're live. Let's talk, gentlemen. Welcome to the foundation for the study of cycles. Yeah, before we jump into today's episode, let me remind you that we host this year in June a live conference in New York. And I would like to invite you to join us at this conference. So let's give it a short intro before we start into the session. Yeah, I would like to invite you. The main reason is we will be there. We can meet in person. We can speak face to face. We can exchange our views on cycles with a lot of experts there. So I would really like to see you there. On today's episode, let's talk today about cycles in the gold and silver mining sector. We didn't talk about that area or asset class for a long time. So I think it's worth an update. Once you've seen the cycles, I think you will understand why I think that's important. For those who are new to this channel, my name is Lars von Thienen, member of the Foundation for the Study of Cycles. And on this channel, every Monday, same time, same place, we will do some education on cycle analysis. So the main purpose of why we're here today is to learn how to apply time cycle analysis on assets, on financial assets. That's the main purpose. We are not here to do any forecasting or prediction. That's why we always keep it the basic time series cycles projection. So hope you will learn something today. And as said, let's use gold and silver mining stock as example for today. So let's jump to the price chart first. So here we have the gold mining stocks. So the GDX as a fund here on a weekly time scale. So we start with the longer term picture. The weekly long-term cycle is at least the place where I would recommend to start always first. At the bottom, we see our cycles spectrum as always, which reveals the time-based cycles in that sense. So what we see or clearly can see is there's one main dominant cycle with a length of 240 weeks. So it's a quite long cycle, but it's very prominent here in the spectrum. So it has a very nice shoulder to the left. You see it even going down to the bottom of the x-axis, which is very rare. So this is an important separation of that cycle to all those shorter cycles here. The shoulder to the right side is not as perfect, but for this long-term cycles, I would count this as even as a sharp peak in the spectrum. So that's what we're looking for. So more to the right, there seems to be even longer cycles, but I would not count them. We need to move to the monthly or other topics here. And there are a lot of shorter term cycles, but I would use those shorter term cycles then when we move to the daily chart. So from the long-term perspective and the long-term analysis, let's go with the 240-week cycle as the main cycle, which is also seen here by our ranking score as most prominent dominant cycle. Okay, we activate that cycle as an overlay. Have a close look at the correlation to previous turns in the price. So you're aware we are using that cycle for changes in trend in the underlying price series. That cycle or the shape of that cycle is not used to do any prediction in regards to major absolute price targets. Yeah? I need to repeat that so that if you're new to that cycle analysis, this is not about prediction the price target range. This is used to predict the timing when we expect a major reversal, yeah, compared to the previous phase of that cycle is expected. So we expect here a reversal to the upside, and we expect here at this point a reversal then to the downside, yeah, which is, oh sorry, my graphics is a little bit disrupted here, which is what happened. And then we expect a timing reversal to the upside, a reversal to the downside, and a reversal to the upside. So you see that timing seems to be a dominant rhythm, just using time-based cycles. And if we now look at the current condition, it looks like we are approaching the topping window. Yeah, let's call it window of opportunity, of one of our colleagues in the foundation would call it. This is the area, the timing window, where we could expect the next major reversal to happen. We could expect. It does not mean it must to be expected here, but we have a high probability based on that cycle that we are due to a correction in the gold mining weekly series here. So let's have also a look at the silver mining stocks. So let's see if silver is revealing a different picture here, or if silver has a similar picture. So therefore, let's switch to silver weekly first, long-term period. Let's start with the cycles perspective first. It's not, we don't have a new all-time high, or not all-time high, but compared to the situation, silver is a little bit lagging the gold. But from the long-term perspective here, we find a similar cycle in terms of nominal length. So this is 233 weeks. But you also see to the left, yeah, and to the right in that spectrum, there is no other long-term cycle. So 233 is very close to 240 weeks. So I would count it's the same nominal cycle we currently see here in the silver mining stocks. It's not silver, it's the silver mining index, compared to the gold long-term cycle. So we can find that long-term cycle in both asset classes, slightly different, but let's see the status. And we are also here arriving at the possible topping projection for this long-term cycle now to come to an end. Yeah, so let's see if we will find an end. And you also see the swings of the projected changes in trend in the past worked quite well. So I think that's the reason and the time to move now to a lower time frame to analyze if we find cycles within cyclids condition, where we look out for the daily cycles, maybe coming also to a top projection in that long-term window now, because that's from a cycle analysis perspective what we're looking for. So we should never use just one cycle and one time frame. You should look out for cycle clusters when their phases come into alignment at the same point of time, or in the same window of opportunity, when the long and the short-term cycles come to the same phasing, which means let's see if on the daily chart we also find topping cycles, dominant cycles, which seem to top out in the projected period from the long-term perspective. That's the basic approach. So this does not only relate to gold or silver, this relates to all asset or asset classes. Therefore, let's switch to the daily gold mining stocks now. Let's start here with the pure screen. So we see here now, which is really in an quite up move here, starting even in 2022. And as we've seen from the long-term analysis, we are quite in this long-term cycle coming to an end. And we see at the bottom here now the cycles condition for the daily cycles in that window. So that spectrum is not as easy or is not as simple as the weekly, where we have clearly seen one dominant cycle peak. Maybe we use picle. Let's name it. Let's look out for picles. Peaks in cycles. Can make it even shorter. So where are the picles? Okay. Fun aside. Let's look for the peaks in those cycles if they align with the current timing condition. But therefore, as said, it's not as easy because we have different cycles from the spectrum perspective here. Yeah, you see they have also quite similar amplitudes or similar condition in the spectrum here. So they are not as clear separated from each other. So there's no easy rule to decide which one out of those 4, 5, okay, maybe this 6, but this is kind of flat plateauish cycles here. So what comes into the options are those 1, 2, 3, 4, 5 cycles here in that setting. And just from the visual shape, it's not as easy to pick one or the other. So therefore we need to think a little bit more how to deal with this situation. So let's make the picture a little bit larger. So the first one, which maybe I would recommend, or let's give it a try, is this one here with the 107 days. And the reason why I'm stating that, if you look at the ranking score, which our AI-guided cycle detection algorithm proposes us, shows us that if we have a look at the visual shape in the spectrum, let's move here. So the visual shape in the spectrum seems to be the best for this peak here. And I just can assume it is based on here the left shoulder. It's clear, we have a clear separation. If you see here, it even goes down to the 0 line in the spectrum. So this is maybe also a good takeaway or learning for you here in that perspective. So when you have this kind of separation where it goes from the peak down to the 0 line of the spectrum, that's a clear indication that there is a very dominant cycle length active here. The right shoulder is not as perfect, but you see it's even coming down the same or even a little bit more than the second one here. So that's one reason the spectrum and the amplitude is also, if you just set the line here, you see to the right, so it has the highest amplitude. So it's the sharpest peak, just to summarize what, also to understand our AI logic here. So this is the sharpest peak, so from the shape, so it's not as flat, it's the sharpest peak. And the left shoulder is going down close to 0, and the amplitude, so the height of that peak is higher than all the other ones here. So I'm not quite sure, but as I've trained that algorithm, these must be the rules why you will find the 107 days cycle ranked as the most important cycle. And you see it's quite here in the middle. So just from looking at the spectrum and the normal data, it's not as easy as that. But therefore we have the help of also computer-guided eyes looking at the spectrum besides our humans here, which tells us this is the most important cycle, also looking at the spectrum plot using AI technology. All right, so here we see this cycle with 107 days. And you can also have a quick check here just to indicate what I always would recommend to do. So the visual alignment of those changes in trend. So here we have a bottom, which is here at that timing. We have a topping here, which is quite close here. We have another bottoming here, which is aligned to this low here. We have a high here, which is close to this timing. We have another interim low here, which is in line with this cycle bottom here. We have a topping situation here, which is aligned with this top formation here. We have 2 lows here, or 3 lows, yeah, 1, 2, 3 in the area of this timing window here. Then we have a topping formation here, at this point here. So just coming from here and then drawing a zigzag into that cyclic rhythm. Yeah, you see that those 1, 2, 3, 4 repetitions are quite close. Here, this one is off, obviously, but then you see it even resynced. So here we have another one, so that is phase off. So, but counting now the overall shape of that rhythm, yeah, you see that it's quite on in terms of the recent stability. Peter, I also see your question in the chat section. So what I just did quickly as a visual confirmation, you can also call this stability or measuring the variation of that cycle length and the variation of that cycle phase in comparison to the real cyclic price behavior. And if this variation is very low, which I just briefly have plotted here on the chart, then you have another confirmation that this is a good cycle to use for forecasting, because we want to use cycles which have a low variability. Cycles always have some kind of variability because it's the nature of cycles, but the more stable they are, the better they're for using them. So that's just the explanation. That's a little bit the procedure which you should always look out for if you do your cycle analysis. For sure, you can implement that in mathematical terms, but I think it's important that we always understand what is happening and what needs to be done and where your eyes should be trained on to find the picles. So this is a picle. This is a picle to use. But so, excuse. Okay, let's zoom out here. This is the most important short-term cycle. That's the story. Why am I explaining all that kind of work? Because this most important short-term cycle here is also looking to in the topping condition or has topped out already. And maybe now you understand what I'm trying to explain is. Now here we have exactly a cycles cluster of a daily dominant cycle, which is currently topping, in alignment maybe with a very early topping of the weekly cycle. I mean, the weekly cycle is close to topping, if you remember the 240-week cycle. Now here we have the 107-day cycle, which is also topping out. But this is a very interesting cycles within cycles alignment. Before moving forward, let me show you just some interesting observations which I did here. As said initially, it's not quite sure which cycle to pick out of those here, right? You might remember this statement just at the beginning. So I tried to explain you why I would favor the 107-day cycle, but in case you're unsure or you're not sure about these, how you measure variance of cycles, let's also activate this shorter one here, 91. And I can do this by just activating or deactivating and just have a look at the current situation. Because when dealing with cycles, you should never go too much into the past, into the history. You could do that, but a perfect alignment in the past is nothing more than curve fitting. We need to understand what the current phase of that cycle or a composite cycle is. So therefore, I always recommend don't look too much far into the past or into the future than the current condition, because you anyhow need to update your analysis because cycles vary over time. So back to the screen. So activating, so have a look at that timing position, because this is now, yeah, and this is the future. This is what we're interested in here. So it is slightly moving to the left, now adding 2 cycles, but it has topped out. So there's still room to the downside. Let's now add also the next peak here, 125. Okay, it's also topping out. So it seems those 3 cycles are forming a cluster here, which topped March 2025. So which topped this month 1 or 2 weeks ago. So let's also add now the next cycle here, which is a 149 in that series. Yeah, and you see this will also form in. So that's always interesting. Even if we would add now all 4, 1, 2, 3, 4 cycles into that group, you will find there's in terms of forecasting area, not really a big deviation. So all those 4 cycles stack up into a topping condition for the daily cycles right now. So it's not as important maybe to pick the specific most dominant cycle, because even all those 4, or let's also add this one here, 194 to the mix. Yeah, it's even forming a perfect daily cycles top here. Without knowing the long-term picture, this is anyhow interesting on its own. So, I mean, we can also zoom out a little bit. You see now how nice those 5 cycles are able to explain all major changes in trend for the past 3 years. Yeah. So I would never recommend use more than 3, maximum 5 cycles. But what I want to showcase here is that all 5 cycles stack up into a possible topping condition on the daily chart. And setting this now into the context of topping long-term weekly cycle in that series brings us into a situation that from a timing perspective, the weekly cycle is now in an early topping stage. And the daily cycles, almost all dominant cycles, stack up to a very prominent cycles cluster peaking now. Okay? That's the timing of that stuff. But for sure, no one is trading time, and we cannot trade time. And no one should base any financial decisions just on pure cycle analysis. But what can be done with this timing information, and if you are a follower of that channel, by the way, I would recommend please subscribe to our channel, like our channel, because we always want to put education out here. Do us a favor, leave a comment, recommend to your friends, and please subscribe. Because if you do so, and if you are a subscriber, you are aware of the fact that once you know the rhythm of the daily and the weekly, you can use that information to optimize and fine-tune technical indicators. For sure, technical indicators are helpful, but technical indicators are more or less only helpful if you tune them with their parameters to the actual market rhythm. Otherwise, you have a lot of whipsaw in those technical indicators. And cycles are the best way how to set the parameters for technical indicators. I think this is an undervalued knowledge piece of gold. No one explains you in the world of technical analysis. So let's do that now on the GDX gold price chart, right? So let me open just a basic GDX. I'm using TradingView here. You can use whatever charting platform. It really doesn't matter. Here we see the GDX price chart on the top, but price here is not as important. Let's start with the main indicator first. Let's therefore make this smaller here. So what you see more in this chart is one of my favorite indicators. It's a relative strength index. I've just provided it with an optimized calculation. As known, if you're a subscriber, you know where to find that. It's free, it's open source, it's available on TradingView for everyone. So I'm just using a special version for making it more easy to do some multi-time frame visualization here. So it has a little bit adaptive bands and it is cyclic smooth. The main topic I want to introduce here, you tune the length and the parameter of those settings for the indicators to half of the cycle which we have just seen in our analysis section. So the daily cycle was 107. Yeah, you might remember 107 for the daily. So I use half of that length to optimize the length parameter for the daily RSI indicator, 55. You could use also 52 or 53. It's not as important. And then I'm also calculating a weekly RSI, CRSI indicator. And here using half of the length of 240. You might remember 240 was the measured dominant cycle on the weekly chart, and half of that length is 200. Half of 240 is 120. So this is the calculation, and that's the important part of the story. You could do this with any technical indicator. Once you do that, those signals and the classical reading of those indicators get much more interesting. Just to explain, if you're new to that, the shading here, so you see some background gray shading and background red shading here, which is plotted. This is due to the fact that this is now the weekly condition. So if the signal line on the weekly is above the upper threshold, so it's overbought, then this is indicated with a red shaded background. So we know that the weekly is also in an overbought condition. And the similar other ways around, if you have a green shaded background, the weekly, the long-term perspective of the cyclic tuned RSI is in the oversold condition below the dashing line. So that's the background, and then we see the standard RSI reading here. So once you find the basic signals crossing the signal line from below across the lower band in the area of green shaded background, these are the highly filtered by technical conditions tuned to the dominant market vibration. And you will look out for the similar condition when this indicator line is dropping below the upper threshold line in the timing situation with red shaded background, which means in the condition of the weekly. So that's just the explanation if you are new to that kind of indicator. And let's now have a look on past signals. So you will see here is the major bottom, and we saw here the entry exactly within that area with this indicator marked 1, 2, third time. So here had the three bullish conditions. Then another entry would have been given here and here. So that indicator spotted the major bottoms in the course of 2023, 2024. So these would have been entry signals. And now the first exit signal came here in October 2024, exactly at that point in time here. And now you see why I'm revealing that where we are today. So that's quite interesting. So this is technical analysis. But now, and now hopefully everything adds up to a story where you can draw your own conclusions. We have the weekly cycle in the early topping formation. We have the daily cycle and the 4 to 5 most dominant cycles on the daily topping out right now. Tuning technical indicators to that kind of dominant vibration brings us to a technical situation where we are now all lining up into a similar situation. That's the topic for today. Running 30 minutes. I mean, I'm committed here to do an analysis for 20 to 30 minutes. I think that's it. So quite interesting to observe the gold mining sector. Long-term cycle, quite similar for silver mining. So I would not see any difference. And gold has a little bit run out of compared to the silver mining stocks anyhow. So maybe we see a change in trend for the gold mining stocks based on timing. Pure education could be completely different what I'm telling you here. So you need to derive your own conclusions. The main purpose is to explain how to read cycles, how to read timing information, how to combine weekly, daily and technical analysis, and to put this all together, maybe in a picture which tells us something. All right. So I see your comments. So now let me spend some time and try to get back to your questions. So if you want, feel free and move to the chat section and throw up your questions? On the stability, I hope I have explained what I'm doing with stability and variation of that. Peter, I will not explain how the reading and the numbers stack up. So this is something maybe we just do internally. Yeah, Dandy, this is a general topic we often try to do. I mean, you're referring to the interviews my colleague, Dr. Richard Smith, is doing on this channel here also. So please look into the videos here. And we do that partially. I mean, not as we did, but I agree to your point, maybe referring also to analysis or charts from our guests. And I did this here sometimes on the market internals. So if you follow the interview from McClellan, he is favoring market internals like the advance and deadline. That's something he developed. And if you look out for videos on market internal cycles, on market internals. I mean, we could do an update, Dan, I agree on that, but you will find already some episodes on Cycles TV where I tried to find cycles in the advanced deckline or in market internals. That's an interesting subject, and it's worth maybe to revisit that idea. Juicebox boy, yeah, you all right, let's bring in that picture here. So you're referring to that when this indicator shows divergences, it's even more interesting. You could argue it's not diverging, but I would also maybe have an argument for the other, because what you see here, it could become now a divergence between price. Let's make this closer here. And here at the top, because you see now price has made a higher high, yeah, here at the top, while the indicator, yeah, has not, but needs to be confirmed. It's not quite clear if that's the case, but if this is a divergence here on a short-term basis, then it's interesting on top of that. And thanks for your question, because it also refers to another indicator, which I have not explained about. But this, you could also smooth out the momentum indicators with using the length information, which I did here. Let me just close your question to make it more transparent here. And here you see that momentum is now negative. And even if we will see a short peak here, so we have a huge divergence between momentum and price. Yeah, so momentum really dropped down, while during that same period, price continued to rise. So the divergence is already kicking in the momentum cyclic tuned indicator. Not finally confirmed on the CRSI, but I could see diverging information already coming to the chart. Yeah, and if you are a member, so Kevin, maybe back to your question. So yes, for dedicated members, we offer and allow also to make use of the multi-time frame indicator. As said, the CRSI is anyhow for free, so you don't need to be a member to just use the cyclic tuned RSI. The multi-time frame version here is then dedicated to our members. Maybe that's even more a reason to become a member. And Kevin, sorry for not getting back to you, but I will review that. And maybe it takes some time, but once you are activated, you are activated. And let me get back to your question to try to get you activated as soon as possible. All right. Yeah, I would say we are running close to 40 minutes. I think it's quite a fair timing. Enough information. One asset class, 1 week. That's it for today. So I hope you like the session. You have seen some interesting cycles lining up. Let's see what the market tells us, and see you next week. See you soon. Same time, same place here on the channel. And don't forget, think about visiting us in June in New York, right? Thank you. Bye.